Evening, everyone. It's 6 o'clock on Monday, the 12th, and this is your closing comment. It's video number 709, and I want to remind everyone that if you like the work, we'd really appreciate if you'd hit that subscribe button. Also, last night in the market letter and in both the body and in the cover sheet that it went out on, there is the link to the Dennis Marlowe interview on futures, and I think anybody who has any interest in futures ought to take 40 minutes and just watch that. Okay, so in the news today, we had the budget deficit for March, just a scant $660 billion with a B, versus last year's $119 billion. And I know that it's an issue about COVID relief and all of the other programs, but that gives us a one-year total of $4.1 trillion deficit. Those are not sustainable numbers. Those are not sustainable for the dollar, and they are not sustainable for our economy. Tomorrow we have CPI, and we also have the small business optimism indicator. So we'll see how optimistic people are. So we had the chips really in the news. The first thing that we had was an Nvidia Investors Day, and they had a lot of great things to say. It's amazing how one company can do as well as they are, and the rest of them are stinking up the place. So Nvidia closed 608.36, and that was up 32.36, or 5.6% on the basis of new product lines, new focus, and not being all over the map with what they want to do. At the same time, Intel and AMD were both lower, because while this president may talk a big game, the base issue for chips is really, I think, pretty simple. It's the same that we had with other industries that exported their supply chain and are now stuck. That is really, from my perspective, what the chip shortage is about. And basically, it was price. And that's what it usually is. It's usually a better price, and it looks good, and you get used to it, and you don't invest in plant and equipment. Now, the president is going to give them $50 billion. I don't think it makes a difference. You can't produce them out of thin air. Facilities will have to be built, and testing will have to happen. And the bottom line is Intel was 65.41, down 286, or 4.2%. And Mr. Cramer's favorite stock that he's been ballyhooing, it's true, he did it on the way up, but he's also been saying it's a buy since it was 100 on the way down. The stock closed 78.58 today, down 418, or 5.1%. Tesla got an upgrade. I mentioned that this morning. It finished the day at 701.68, up almost 25, or 3.7. This morning it was up, but it wasn't up. It was up about half that. And Alibaba, who got a ruling from China on a fine for anti-competitive behavior, seems that they like that. They like what the fine amounted to, and to have it behind them. The stock closed today 244.55, up 21.26, or just under 10% on that $2.8 billion fine. We also had earnings from Apria. This is a cannabis deal. They have a merger with Tilray that closes shortly. The stock today was $14 down $2.28. It was a major earnings miss. The issues are stores that were closed in certain regions of Canada, and the bottom line is they lost money, big money. This is a stock that this year had gone from 7 to 32, most of it in February, and now has just broken below 14, but we'll use that 14 down to 28 or 14% as the number. And the Microsoft NUAN deal, everybody absolutely loves it. Microsoft was unchanged, which is not a big surprise. Nuance, which traded at 56 this morning, which was the cash price, never got above 53.93 and closed 52.85, up $7.27. I don't think that there's going to be a problem with that deal, but you never know. And one more Chinese stock. If this isn't the reason to not trade secondary Chinese stocks, I'm not talking about Alibaba or Baidu. I'm talking about this one, TIRX. This is an insurance company. They went public, and the deal happened the end of January. The low in January was $11.10. The high a month ago on the 3rd of March was $103.87. Quite a move. And today it had a high of 97.27 and a low of 12.15. It's rallied since the close of the regular market, and it's managed to get back to about $21, which is still down $67 or 75%. To give you an idea of just how bogus this company actually is, in trying to find news, and there was none, in trying to find news, I found a couple of boards, investor alert type boards with a picture of a somewhat attractive Chinese girl telling you to buy TIRX. So, I guess she must not be registered. Okay, so the Dow was down about 135 at its worst. It finished down half that, down 66.20, less than 0.2%, and internals were 1-to-1, which is, okay. NASDAQ was down 50.18, or just under 0.4%, and the advanced declines there were about 1.5-to-1 to the downside. Volume was about appropriate. It was, I think, 4.2 billion. Friday it was 4.1 billion. So, we're in the general area. The most impressive of all, I think, was the S&P, which was down most of the day and managed to close down less than $1, 0.81 cents. So there is no percentage that I would use there. The Russell gave back a little bit of its gains from Friday, closed down 969, 0.4%, and the winner of the day was the transports, up 51.25, or 0.33%. The chart on the screen is the oil, and it was up almost $61 today. I'm going to make this a little bigger. Up to $61, exactly where this blue line, which is the 20-day moving average, it looks like it's going to cross over to the downside through the 50-day MA, and I'm still looking for it to trade down to, at a minimum, these lows around 57.25, and possibly all the way back down here to 55. Whether it does it before our options expire on Friday is another thing, but this is not a good-looking chart. Since we made the high, we've had a steady move lower. we've had continuous failures at both the downtrend line and the moving averages. We have the cross here to the downside and basically 18 days of sideways to lower action. The first close that I'd like to see to the downside would be 58.65, and the low close here is 57.76. So, not a lot of difference there, but this could get very ugly very quickly. Gold was down again today, down $12. Just to be honest about it, I have no clue why gold is not acting better with 3/4 or 70% of a trillion deficit, a 4.1 trillion 1 year budget deficit, and a dollar that continues to be unimpressive on the upside. It was 93.5 not long ago, closed today 92.14, down another 2 basis points. But the gold will just not act like the gold of old. And frankly, I can't think that it's, Dennis actually pointed this out to me today. Everybody talks about gold not paying any interest. Bitcoin pays no interest, and it closed today at pretty close to another new high, having traded 61,945 and closed up just under $1,800 at 60,545. So, you can't paint one because it doesn't have interest, and then argue the fact in the other direction on another something that has really no intrinsic value. In any event, that's all I have for you tonight. I'll be back first thing in the morning, and I'll hopefully will have those that CPI and that small business number before the market opens. Have a good one. Don't forget to subscribe, and don't forget to watch that Zoom on futures.